Welcome to Daily Market Waves, where we track the latest market shifts and uncover the next big moves across multiple asset classes. Today's session is packed with critical developments. Volatility and dollar. Are we on the verge of a market shakeup? TLT and yields. Bonds and rates sending new signals. What's next? Oil, gold, and natural gas. Breakdowns or breakouts in commodities. S&P 500, Nasdaq, and major sectors, momentum shifts and key support levels. Tesla and JP Morgan in focus, big moves in these market leaders. We'll dive into Elliott Wave structures, technical indicators, and candlestick formations for map out the most probable path ahead. Let's break down the charts and track the signals driving the market today. And as usual, we start with volatility. Volatility candles today for the index and for the index futures. I would say that today we have a very neutral candle. So they potentially could be bearish. However, they require a very strong confirmations in order to change the trend here and in order to flip the odds. So far, I would consider this as a bullish continuation candles until we see a very strong reversal tomorrow. And if we look at the 2-day frame, 3-day frame, so none of them closed today, and we cannot evaluate this very strong momentum. Well, that's the perspective for tomorrow, neutral, until we see a move in either direction. And if we look at our chart that we discussed yesterday, so far volatility is tracking along this channel, and the path, the potential target could be huge. So we cannot forecast this at the moment. We just know what would be the boundaries. So if volatility spikes towards 45, 50, it wouldn't be a surprise at all. So far, that's the track. Now let's have a look at the dollar index. This is an interesting thing here. Yesterday, dollar formed a Harami candle, which could potentially mark a bottom. However, today it is not a very... this is not a confirmation for Harami at all, so quite the contrary. So this is a bearish continuation candle, and it has technical support. It looks like we are going lower, and I looked at the 4 and 5 hour frames, which have significant bullish divergence right now, and well, 2 more hours until the end of the day. If this candle forms a bullish engulfing 4 or 5 hour frame, that would be somewhat significant, but we need to see how it closes indeed in 2 hours. And this is the chart, the 1-minute chart for the dollar index that I've been tracking so far. I can see that a very clean impulse here of the bottom, and potentially wave 2 or B. So in general, if dollar forms something like this, for example, 3, 4, and somewhere here towards 103.5, 555, that would be a very significant impulse of the bottom and could be a beginning of start something bigger. However, this is not a clean direction right now, so this can transform into anything. And if we look at the daily candles so far look bearish, possibly signaling continued move lower. That's the perspective. Now let's have a look at bonds. What is bond market telling us? Well, I think that these green candles today might disappoint TLT investors tomorrow. That's the big, possibly a big reversal and possibly a confirmation of a bottom. So far, this is a very strong bullish engulfing for 20, 30, and 10-year. 5-year yield is looking somewhat bullish neutral, and this one is also bullish neutral 2-year yield. So tomorrow we will see a confirmation. Either we'll see confirmation or not. And something tells that we might see this confirmation tomorrow, because a very fresh MACD cross here for 30 and 20-year yields on the daily frame, it could be supportive for the next move higher. And if we look at the 2-day frame, which is closing tomorrow, there is a good chance for a bigger reversal. Now let's have a look at the chart. So this is the spread, and the one moment I wanted to bring today, that this is a good sign. We have a fresh 50 over 200 daily moving averages golden cross, and there is a very good chance that the spread will continue in the positive direction. Well, then we might need to reshape this chart from Elliott Wave perspective. Let's see if it makes a new higher high. It will be a very significant event. Now let's have a look at the chart. So this is the 20-year yield, a counterpart of TLT. Now we have an impulse here, and as I discussed yesterday, we might see an extended wave 2 or B, and now the candles are looking fairly bullish here, and I would say that there is a very good chance that this flag is complete, and this would be the target for the next wave. Well, so far it is on track. Let's see how it moves tomorrow. Candles at least are supportive, and also the technicals. This is the TLT Elliott Wave, and it is the same as we discussed yesterday. So the risks remain the same. This 89.68 level remains a very critical one. If it is crossed tomorrow, then for sure this potential blue count will be invalidated, and even if we see a slight move higher, the red path will be primary here. And at this point, I was saying before that this could be wave 1, 2, 3, 4, and now we are looking for 5. So we might reconsider this, because this might be the wave 1, and this would be the wave 2, and the wave 3 is about to start. But so far, we'll keep it for now until we see better confirmations. Well, that's the perspective for this one, and what candles tell us is that the chances for a move lower tomorrow are fairly significant. The daily and 2-day closed with bearish candles, although there are still chances for bulls to move higher tomorrow. I would say they are diminishing. That's all I wanted to say about the bond market, and now let's move to commodities, and we'll start with natural gas. So natural gas, this is the chart that we shared with our subscribers way back in February 1st, when natural gas was about 309, and since then it made 60% until this top. So now it is moving down, and that's the perspective for now. I can see that the first wave has been corrective, potentially wave B, and wave C is unfolding. So how far would it go? Well, we might get some rough estimates, but I wouldn't count on it at this point, because the waves are very immature now, and we need a bigger picture. And if you look at the natural gas candles, obviously this is going to be a bearish closure today after this hammer, and the chances for a move lower tomorrow would be significant. And also tomorrow we'll be watching the 3-day candle, which is also shaping up as a big hammer. It could potentially become a bearish engulfing, and this would be a fairly serious on the 3-day frame. So that's the perspective for natural gas. And as I discussed right now, it's better to stay away, wait until this correction is over. Now the next one is oil. Oil is bearish, and no doubts about it. However, we might see a bounce on the short-term frame. So I can say that the 10-day frame that is closing today, it is definitely bearish. It closes in 1 hour. I doubt anything gonna happen in 1 hour, so that would change the stance here, and the chances for the next 10 days to be red are significant. However, on the daily frame, we might see a little bounce here because this candle technically is slightly bullish. It's a piercing line, and we might see a continued move down tomorrow, move up tomorrow. And if we look at the wave formation, this has been wave that we've been tracking since February 24th. So yesterday I discussed the potential for a bigger flag or a bigger flat here for wave 4 as alternative 4. So far it looks like it can happen, and I'd like to emphasize this green line here. It's a critical one. If it's closed, then we might consider different counts for oil, and that's the perspective for now. And if we look at our longer term chart, it has been unchanged since the end of December. Technically, we just keep adding more elements. So oil rallied after December until the middle of January, and then it is falling down as exactly as we forecasted. So now let's before we move from the oil sector, I'd like to mention these. So Exxon formed a very strong bearish engulfing candle, signaling a very high chance for the decline tomorrow. The same for Chevron. ConocoPhillips is technically bullish. However, I would like to emphasize it's not a healthy rally here, and especially if these the first two go down tomorrow, well, there is also a chance for ConocoPhillips. So I wouldn't bet on it. So this is more neutral than bearish than bullish at the moment. Now let's move on to precious metals and have a look at gold. What we are seeing here is a bullish engulfing, potential bullish engulfing. It's not, however, as strong as it was just 1 hour ago. It pulled back a little bit, and well, still 1 hour until the closure. If it closes above the yesterday's open, it would be very bullish engulfing. If it doesn't, well, there could be different stories. And today, if it doesn't close with a bullish engulfing, I'm planning to shot another video about gold and potentially silver. However, if we look at the weekly frame, for example, this is still a concern, because 2 weeks ago we had this strong bearish engulfing, which wasn't cancelled last week, and so far it still has a chance to negate it, but well, we need to see a real closure of the week. So until gold moves above the high of this red candle, I would be neutral. And if we look at the wave perspective, so what we're seeing here, there are two potential moves here, and again, there is no clarity at all. So this potential wave of the bottom could be an impulse, but I have some questions about the structure of the wave. And at the same time, it could be a corrective wave, obviously. So if this is the case, then we would be looking for an ABC correction and a move down, as long as gold stays below this level, the green line. If, however, it breaks up, then this would be potential wave 3 being formed, and I would expect a move to an all-time high and higher in the near future. That's for gold. If we look at the bigger perspective that we discussed multiple times, so far there is no clarity at all. This is the perspective, couple of paths are on the table, including the blue one or the green and red one. The difference between green and red, so they are crossing this 2761, but to make it a clear ending diagonal versus a non-overlapping ending diagonal. So and I'm looking for this wave as an ending diagonal because of this wave structure here, the very first wave of the bottom in November, beginning of November. Now let's have a look at GOD. GOD remains the same technically. So yesterday was a very bearish candle. Today is a very bullish candle. So it is doing a whipsaw moves here, and the main indicator remains on the weekly frame. So this is the huge bearish engulfing candle. In order to be cancelled, gold GOD needs to move and close above this green line. If it closes, then it opens the path upward. If it closes below the red line here, then it will be a bearish move. Well, that's all about commodities, oil, natural gas, and gold. Let's move on to the stock market. So this is the closure today of S&P 500, Nasdaq, Dow Jones, and Russell. So what we are seeing, that all of them formed bearish or neutral bearish candles. I would say that all of them are oversold, but not critically at the moment. So we might see a bounce, but the odds remain bearish. If we look at the futures, which are closing in 2 minutes, so far it is also bearish, particularly for Dow Jones. And Nasdaq is also quite bearish. So far technical support is great for the continued bearish move. If you look at the 2-day frame, which also closed today, the candles are clearly bearish, all of them, nothing to add. And I would say that SPY, S&P 500, Nasdaq, and Dow Jones, they lost the 200 days moving average support, and Russell is below 400. Now let's have a look at the waves. So that's the wave we have been tracking so far, and it's been a great instrument for us. I would say that from Fibonacci perspective, S&P 500 might be approaching the end of wave 3, and some technicals support that this could be wave 3. Well, once we see some reversal pattern, we might see a bigger correction for wave 4, but we are yet to see these patterns. So far, the odds remain bearish. A similar situation for Nasdaq. Nasdaq nicely hit our target here that we identified a few weeks ago, and now it is also flirting with the important Fibonacci levels. If it stops here and forms a corrective wave, well, that we would consider it as a wave 4, or potentially it could be wave B of an ABC bigger formation. Now let's have a look at the sectors. The sectors closed today. So what we are seeing here is primarily bearish, and financials, if we look at the 2-day frame, That's kind of unusual candle. We might see a very strong bounce tomorrow for financial. Technology is bearish, and healthcare, consumer discretionary energy particularly bearish with a strong bearish engulfing. Utility is somewhat bearish neutral, and if we look at the 2-day frame, well, that's indeed neutral. We need to see a better move here. Staples are bearish, possibly forming following three methods here, and this is a very strong continuation candle combo. Industrials are bearish and they lost 200 days moving average, which is your red line. Speaking about the big players, Microsoft had a good chance today to form a bullish engulfing, and I thought, well, that's probably going to be a reversal. But no, it formed only a thrusting line, and the chances for a move lower are significant. The only very strong bullish here is Amazon, and it would be interesting to see tomorrow. Most likely it's going to be a continued move upward. However, I wouldn't expect it to be a very big one. We'll see how it forms at the next one. Meta is bullish barely, still needs a confirmation for this piercing line. Nvidia is somewhat neutral. We need to see the next candle. Google is bearish, Apple is bearish, Tesla is also bearish, however closer to neutral. We'll just discuss Tesla in a few minutes. And Berkshire, it's interesting how it is moving below the 8 days EMA resistance line. It's already made 5 candles here. So far, this is bearish. Now let's have a look at two special features today. First is Tesla, and this is an amazing call that we made way back in February 1st, saying that Tesla is about to lose about 44%. Based on our statistical call and analysis, we identified this area 260 to 200 and said that Tesla should arrive here. The only thing that I wouldn't expect it to be that fast. Well, that's so far. Tesla lost on the weekly frame 50 and 100 days, 100 weeks moving averages, and the 200. Well, that's everything lost. Now we will be talking about the monthly. If we look at the candles, this potentially a bullish Harami candle. If it gets a strong confirmation tomorrow, we might see a strong bounce. And considering that Tesla is strongly oversold, this could be a very viable option for tomorrow. Despite that the 2-day frame is bearish, we also need to see how Tesla confirms the break below this red line. On the 10-day frame, it is definitely bearish, and now we are seeing a very strong MACD cross on the 10-day frame, which is a very significant event. And even the Tesla bounces here, I would still expect it to move lower, perhaps even to 150 or lower. That's the candles perspective. And now let's have a look at the Elliott Waves. Few days ago, I thought that Tesla might form a bottom. However, it doesn't look like it was a very strong case. So there were no confirmation for the potential move, and Tesla moved lower here. So now it has a chance to complete this wave here. And this would be, I would be considering this as a wave 3 of a bigger formation, or an ABC formation being complete. After this ABC, it would be normal to see something like this, for example, and another wave down. That's perspective for an ABC. However, I'd like to emphasize we need to see a strong confirmation for a reversal. There is none so far. And this is the chart that we been tracking since the beginning of January, when we said Tesla is set for a big loss, and the only wave that we can see of that magnitude would be an impulsive wave C. So far, it looks like waves 1, 2, 3 potentially complete. Now we can might see wave 4 and wave 5 for this particular chart. Now let's have a look at JP Morgan, and I have some considerations here. So first of all, let's have a look at the candles. It looks like the JP is about to make a big move down in addition to what it did already. So if we look at this 15-day frame, it's a clear tower top, very strong, formed yesterday, and now the chances for moving lower are very, very high. Whether it's going to be an immediate move or before any recovery, or potentially it could be an attempt to negate this formation and then move down, the odds for a move lower are very significant at the moment. Well, that's the candle formation, that's 15 day. And if we look at the monthly closure, potential monthly closure, so this is going to be a huge one also. Even though we still have 20 days till the end of months, this is something to be monitored. I'm not sure we have seen this type of candle, so this looks like the only somewhat similar we can see here in year 1998. That was also a strong tower top for JP Morgan. Other than that, I don't see any similar structures here. So that's the possibility, and we might see a repeated experience here. Now let's have a look at the technical perspective. So this is a big MACD cross, 10-day MACD cross that happened just a few days ago, and if it is confirmed on next Tuesday, on next Monday, well, it will be by far the biggest one in the JP Morgan's history. And I would like to say this is the entire history, and this is by far the biggest one. By far, it's 60% bigger than this one that happened in 2021, which led to the loss of about 42-43% of the stock's cap. Now, if we look at the same decline, it would mean that we are looking for 160 target for JP Morgan in the next couple of months or quarters. I don't know how fast would it go. If we look at Tesla, it was crazy fast, and I was expecting it to get there in a couple of quarters. But this is assuming that this decline would be the same as it happened in 2022. However, this cross was 60% higher, and if we consider this, let's say 60%, then we might be looking for something like this, 62-65% decline, and this would be a totally different story. So this is, I would say, at some point JP Morgan might be chasing the double digit range, and this would be a very unexpected for some behavior. However, not for us. Let's see what it does. So I would say that we might expect JP Morgan to move somewhere here in the nearest future. Well, between 100 and 160. And by the way, 62% would be, now if we return back to this particular chart that I just completed, what we are seeing here, potentially this could be, I'm looking at the blue count right now as a primary one. So in 2021, JP Morgan potentially completed the cycle, and it made wave 2, and wave 3 right now looks like it is complete. The most typical retrace area for wave 4 of that magnitude would be between 238 and 191. That's based on several estimates. However, if it goes lower and if it breaks, let's say 172, which is a possibility based on this estimate. So even the smallest, like 42% off, it would be 160, right? So, and if it goes into 160, breaking this level, then I would be considering the green count. So this was wave 3, this was wave 4, and this was wave 5. And this would be wave 2 of the super cycle, and its targets would be 170 to 108, 110. That's the most typical ones. Well, in this case, it would be aligned with what we are seeing here based on the MACD cross. Well, that's the perspective for JP Morgan Chase, and well, this is a significant and very big player. If it is expected to go there by technical estimates, maybe the other financials are going to be looking for something similar. Well, let me wrap it up here. So today's analysis revealed critical market signals, from volatility spikes to commodity shifts and major stock movements. With Tesla and JP Morgan making big waves, the question remains, are we seeing the start of a larger trend or just a temporary shakeup? As key levels are tested across equities, bonds, and commodities, the next moves in the SP 500, Nasdaq, and major sectors could set the tone for the coming weeks. We'll continue tracking these shifts daily, bringing you real-time insights on where the markets are heading next. Stay tuned for the next daily market waves update, and as always, keep an eye on the charts, and happy trading.